Bubble, crash, recession. These are big, scary words that people are throwing all over the place to try to make conversation and create news and buzz around the real estate industry. And for people out there who don't do this on a day-to-day basis, I understand that this can be really confusing and frightening. But are we really there? Are these stories true? Is the market really going to tank? When I look at what's really happening, the numbers just don't add up. So we're going to dive into all the data and take a look in this month's Dane County Housing Market Update for June of 2022. Hey everybody, I'm Jeff Minter, team leader of the Minter team at Realty Executives Cooper Springs. Now, one of the tenets of markets is that when it goes up, it'll go down, right? I mean, that's kind of one of the things that people always talk about. And we are due for a correction or shift or slowdown. There will be change. It's not constant growth. But when we take a look at what's going on nationally with home prices, it's not quite the same thing that people are expecting. If we take a look at housing prices historically over time, dating back to I think 1963, specifically nationally, we're going to see some interesting stuff. So here we have our historical home price data, and you can see it's a slow climb. Obviously, we have a quick climb starting in, surprise, surprise, Q2 of 2020. Steep jump, right? That's big. That's about as big as we've seen. So looking at median home prices over time, we only seen one significant decrease, and that's about a 19% decrease in the median home value from 2007 down to 2009. Other than that, our dips have been very small and minimal over our history. And when we look back to that last crash of that 19%, a significant portion of that was due to home loans that people probably shouldn't have gotten in the first place, and more importantly, they probably wouldn't qualify for today. Not only are lending restrictions tighter today, but I can't remember a market over the last 10 years where I've seen more people putting 20% down or more in order to get an accepted offer and close on their house. This means that many home buyers today are cash strong and entering into their home with significant built-in equity. This equity is a built-in buffer against decreasing home prices. So even if home prices do decrease, which I do not see them doing at this point, but if they do decrease, it is very unlikely that most of today's home buyers are going to end up underwater like they did in 2007, 8, and 9. Now, we've said it before and we'll say it again. The biggest factor affecting our market today, and why I do not believe that we're going to see a decrease in home values, is the basic economic principle of supply and demand. It's the number one law and the first thing we learned about in economics back in high school. Let's take a look at these graphs showing where our supply and demand was prior to the last crash and where we are today. Now, if we look at what was going on in 2006 through 2007, what we'll see is, first of all, this was kind of right here at the first quarter of 2007 is where we started to see the decline in home values. And when we look back at this time period, right here in October of 2006, we had 5,500 houses on the market in Dane County. Over this time period, there was a low of 4,000. So this is where we had the least number of houses. Meanwhile, our demand is very consistent with what we see today, with peaks around 1,000 sales per month in the most productive months of the year. 2008 and 9 look very much the same. Once again, even here in June of 2008, we're looking at just under 800, about 750 sales. So this was a down year in sales. So these 2 years were lower in sales, but look at our supply. It's still up there, over 5,000. We got a low of no less than 4,200 in terms of active listings. Now let's compare that to where we are today. If we look at 2020 and 2021, here is our demand. Once again, we're peaking out 950 or so, 1,000 sales. So this looks very similar to what we saw in 2006-7 in terms of demand. Yet our supply is incredibly low. Right here in February of 2021, we had less than 450 houses available on the market. And remember, back in 2006, 7, 8, 9, we were up over 5,000. That's more than 10 times as many houses available on the market, yet we maintain the same level of demand. So our supply has gone down 10 times without our demand changing at all. If we look at 2022 leading up to where we are right now, we can see that we are in much of the same. Look at February of 2022, under 300 houses available on the market. Our demand stays up here at about 1,000. Now here's a really key piece that I want to make sure that we point out and we understand. I'm going to take us back to 2014 and 15 and look at what was going on there, because we saw increasing home prices during this time. Here's 2014 and 15, where the blue line started to cross the pink line here. We're still hitting 1,100 sales, 1,000 sales at our peak. But look at where we are in supply. 3 to 4 or 5 times as many houses as we have available on the market today. Yet home prices still went up. So home prices were still increasing. We were still seeing appreciation, even though we had 5 times as many houses and the same level as demand as what we've seen historically over the last decade plus. Currently, interest rates are rising, and that's going to price some home buyers out of today's market. But the reality is people still need places to live. And people are still going to buy homes no matter what the market dynamics are. We can see that from 2006 to 2009 when people were still buying houses. We can see that in 2014 and 15 where demand looked very similar to what it's looked like today. The difference has been supply, and our supply has got to change before we see any significant shift in home values or houses depreciating in value. So what does this mean to you, right? Well, if you are a home buyer or curious about buying a house, if you want to buy a house, buy a house. There's no point in waiting. All data shows that home prices are going to continue to increase. It's possible that interest rates will continue to increase, which means waiting things out for a different market is going to do nothing other than lead to a more expensive monthly payment for you when you finally do purchase a house. Home sellers, there's no need to rush to sell your house in this market. Yes, we would love to see more houses getting listed and being put on the market, but you shouldn't feel the pressure to do so before a market shift happens. It is absolutely a great time to be a home seller. And we are absolutely still in a market where overall sellers can control much of the process. But the reality is, even if we do shift, even if supply does go up, even if things do slow down, your home's going to continue to appreciate and you will still be in financially stable shape. So the ultimate point is this: we're going to be okay. And if you need to move, move. If you want to move for your lifestyle or to fulfill a dream, do it. There's no point in waiting for things to change. Waiting to buy is going to lead to a higher monthly payment. Waiting to sell changes dynamics, but you're going to be okay. To stay up to date with more market news, homebuyer and home seller tips, and new listings, make sure you follow us on social media. And for questions or comments about this video or your unique situation, leave us a comment below or contact our team. I'd love to know what you're thinking. Once again, I'm Jeff. Let's connect soon.